Good morning, nieces and nephews. I wanted to take the time to make a quick pre-market analysis video for you guys to help us prepare for today and the best way to approach this crazy, trappy market. Okay, and also because Uncle likes talking to you guys. Keyword trappy. All right, this crazy trappy market. Keyword trappy. Uncle often talk about how we should trade the market unbiasedly like a sheep because there's the bulls and then there's the bears. But then there's us, the sheeps. What does it mean to be a sheep? Well, the sheep is usually known to be a follower and it's a very humbling animal. Okay, a bull is a very strong animal, bear is a very strong animal. There's some ego there. But to be a sheep, it's about being humble and being a follower, right? But a follower of what? A follower of the price action, okay? And there's certain techniques and tactics that Uncle likes to do in order for me to follow the price action a little better. And one principle, one tactic that I always tell people, I like to tell people, especially my Discord members, is to trade with the traps, okay? Because we are trading in a manipulated market. We know there's going to be traps. The bulls are going to get traps. The bears are going to get traps, okay? Most people, they're looking to call tops or they're looking to call bottoms. But we, as sheeps, are just looking for setups to catch that level-to-level move because the most important thing to us is our P&L. It's our money and we want it now. That's why we day trade or we swing trade for the short term because we want to get that money. And we use these levels and setups for entries and exits, and we do it unbiasedly, guys. Unbiasedly. So something Uncle has been talking about all week is that staying above the 570 level was overall bullish. Okay. Yesterday I talked about staying above the 5 daily moving average. Okay. And shout out to my Discord member Vav. He mentioned to me that TradingView actually have what's called a DSMA, where you can see even on the smaller time frames the daily chart moving averages. Okay, so I don't even have to see this purple line. That's my 5 daily moving average. Okay, I don't even have to go back and forth between the daily chart and the 15-minute chart anymore, unless I want to. Okay, but that purple line represents the 5 daily moving average, and like I said, overall, when price is above the 5 daily moving average, is usually overall bullish. Okay, guys, it's usually overall bullish. So as of right now, for this bullishness to continue, more resistant levels need to clear. Okay, guys, and when we look at the 15-minute chart, you guys know I had that 570 level. Okay, look at that yellow line. Look at what happened there. Boom. All right. That's important. That's one of the best entries. This is what I mean by trade with the traps. False breakouts and false breakdown setups. One could make a living just strictly trading off of these setups. I'm telling y'all. Okay. You have this false breakout of the 572 level yesterday, and it dropped all the way down to 568, and then you had this false breakdown of 570, and it led to a nice move to the upside. This is what I mean by trading with the traps. You know there's going to be a trap. You know the market makers are out there. You know the composite man. Guys, look up the composite man. You know he's out there ready to make some moves. And his move is usually to set a trap against who? Us, the retail traders. Okay? So why not trade with the trap using false breakouts and false breakdowns as entry? We play it level to level and then leave runners. Okay, so now that we had this false breakdown of the 570 level, I'd be watching that level closely. Okay, overall I'm still bullish above 570 for multiple reasons. Okay, and especially if we stay above the 5 daily moving average, which is creeping up to my 572 support level. All right, guys, those are support. 572 and 570. As long as the price is above those two levels, SPY is still bullish. Okay, now clearing the next resistance level at 573.6. It's actually above 573.6. So as long as above 573.6, next resistant levels are 575, 576.5, and 578. Okay, guys, those levels are possible as long as we can stay above these support levels and clear 575. I can't get bearish or favor a pullback unless the price tells us. Now, when SPY gets bearish, it usually spends time below the 5 daily moving average. So once again, support levels must fail. 573.6 must fail. 572 to get us back below the 5 daily moving average, and 570 to get us below that Fibonacci level. We break down those levels, guys, it is pull back time. Okay? Triple Q also still currently above the 5 daily moving average. All right. And if it can clear my next resistance at 489 and 491, we are heading up higher. I cannot favor some type of pullback unless the conditions of a pullback, for me at least, is met. And one of those conditions is staying and getting below the 5 daily moving average. All right. Which means Triple Q needs to break down 487. Break down 487 to put 485, 483, and 480, 478.7 all back in play. We got to break down 487. All right. We break down 487. Pullback time is possible. We break out 489, more upside is possible. NVDA, I'm still watching for this bullish counterattack coming off of the back test of this triangle pattern as well. Can bulls clear 122 today? If they do, it is going to be bullish in my opinion. I would look to long with those upper targets in play. 123.5, 125, and 127. Above 127, a bottom is likely in with 130 or higher in play. All right. For this bullish counterattack to be invalidated, supports at 120 and 118 must fail. They both must fail. Below 118, I would be bear biased to the downside. 116, 114 or lower would definitely be a possibility, possibly all the way down to 111. Here is Tesla. This stock has been destroying the bears. And if they want to continue to destroy the bears, they need to take out next resistant levels at 265. If it clears, 267, 269, and 271 would be targets and in play. If it's pullback time, then 262 and 260 both must fail. The 5 daily moving average is around 257.5. It's creeping up to 258. Put the 5 daily moving average in your charts and watch that moving average, whatever the level it is at open. Because if Tesla breaks it down, that is bearish and would possibly go back all the way down to 255, 252, and 250. IWM still managed to stay above the 5 daily moving average. Keep in mind, we did break it down last Wednesday and Thursday, but it did recapture. So if there is follow through, then 222 must clear today, preferably today. Doesn't have to be today, but preferably today to put higher targets and play 224 plus. All right. If it is back to the downside is the plan, then 220 must fail to put 218, 216.4 or lower in play. Below 218, I would be bear bias. All right, guys. And that's it, guys. That's my pre-market analysis. I hope you guys found value in this. Remember to trade with the traps, trade it sheep style. And if you want more content from me, join Uncle's Discord. I hope to see you guys in the sheep's den one of these days. Peace.